Gold smashes through $4,000, a new safe haven apex by AZLAN Adnan, MA. 8th October 2025. Gold prices have stormed past the your $1,000 per ounce mark for the first time in history, shaking global markets and confirming the metal's return as the ultimate safe haven in times of fear. Spot gold breached the barrier at 11:54 GMT, hitting $4,036.22 before settling near $4,018.52 by end of day, up about 0.8% on the session and nearly 50% for the year to date. Why gold broke out? Gold's spectacular rise reflects a perfect storm of economic and political anxiety. 1. Anticipation of U.S. interest rate cuts. Markets now expect the U.S. Federal Reserve to begin reducing rates soon. Lower yields make holding gold, which pays no interest, comparatively attractive. Traders view gold as insurance against the erosion of currency value. Number 2. Escalating geopolitical tension and fiscal instability. The ongoing U.S. government shutdown, renewed conflict zones in Eastern Europe and the Middle East, and political turmoil in France and Japan have all driven investors toward hard assets. Uncertainty is the oxygen for gold's rise. Number 3. Surging central bank and institutional demand. Sovereign buyers continue to add to their reserves, while gold-backed ETFs are recording heavy inflows. Analysts at Goldman Sachs recently raised their forecast, seeing gold at $4,900 per ounce by end 2026, citing structural demand from emerging market central banks. 4. Weakening U.S. dollar and easing yields. The dollar's retreat and softening bond yields have amplified gold's appeal, particularly for non-U.S. investors hedging against currency depreciation. Number 5. Momentum and fear of missing out. Technical traders and retail investors have joined the rally, pushing prices further once the $3,900 level gave way. The surge now has a self-sustaining rhythm driven by sentiment as much as fundamentals. What it means for Malaysia. For Malaysia and the broader ASEAN region, gold's breakout is both opportunity and warning. Currency pressure. The strong dollar and global risk aversion could weigh on the ringgit, which has already softened this quarter. A prolonged gold rally typically coincides with weaker emerging market currencies, raising import costs and imported inflation. Inflation hedge and store of value. Domestic investors may pivot further into physical gold and gold-linked unit trusts as a hedge against currency weakness. Local jewelers and refiners could see stronger margins in the short term. Portfolio rebalancing. Wealth managers are likely to raise exposure to commodities and safe assets. Malaysian bond yields could inch higher as global investors retreat to dollar-denominated debt. Signal of fear, not growth. While rising gold prices can look bullish, the subtext is market anxiety. The surge hints at fragile global confidence and a slowdown in major economies that would ripple into Malaysia's export sector. In short, gold above $4,000 is less a celebration than a warning flare. It reflects deep unease with currencies, debt, and leadership across major economies, a world hedging not for profit, but for survival.
share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel to show your support.